Good morning, dear students. Hope you all are well. On today's section, we are going to discuss with the golden principles of accounting. As we know, it is a very much important part of the accounting section. On the very beginning of the classes, I think you will be hearing a word, debit and credit. We want to know the debit and credit here for knowing about the golden principles of accounting. So, what is meant by debit and credit? The debit and credit can be compared with the addition and subtraction in mathematics. These two things are done with the help of plus and minus in the mathematics. Similarly, when coming to the accounting section, we are doing this process through the accounting tools, that is debit and credit. Instead of plus and minus, we are taking the debits and credits in accounts for doing the same purpose. That is, we can use the debit as well as credit for both the functions, adding and subtraction. Now I think you are a little bit confused. That is, where we use the debit for adding and where we use the credit for adding. Right? For this, we want to introduce the 5 major things in accounts. So, let's know what is the 5 major things that you want to know. The first one is asset. Asset is the property owned by a person which have some values for meeting his commitments, debts, etc. I want to give you some examples that furnitures, buildings, machineries, etc. can come under the section of assets. The next one is liabilities. Liabilities can be explained as the amount of money that we have owed to someone. Okay? It can be bank loan, bank overdraft, etc. The next one is, that is the third one is capital. Capital is the amount that we used to start up something. It can be a venture, it can be an account, whatever. The amount we use for starting something is termed as capital. And the fourth one is expense. Expense can be defined as the cost incurred or the amount required for someone. It can be salaries, wages, rents, etc. And the final one, that is the fifth one, is the income. Income is the amount that is received. It can be in the form of payments or interest from any investment, etc. So, I think you are clear with the 5 things. These 5 ones can be categorized again into 2. That is, it is categorized on the basis of the usage of debit and credit for the accounting purposes. As I told, debit and credit, that is, the both can be used as the addition and subtraction tools. Right. So, we want to know where we want to use the debit for addition and credit for subtraction. So, the first category is going to deal with that. That is, where debit is act as an addition tool and credit is act as a subtracting tool. So, let's look on that. Assets and expenses. Listen, assets and expenses are come under this category. That is, when assets and expenses want to increase, we use debit, and similarly, if we want to reduce, we use credit. So, we are done with the first category. Let's move on to the second category. Second category includes liabilities, income, and capital. In this category, we use credit as the addition tool and debit as the subtraction tool. Okay, you are clear? So, in increasing the liabilities, income and capital, we use credit. Similarly, in decreasing the liabilities, income and capital, we use debit as a tool. So, this is the golden principle of accounting, that we want to debit the asset and expenses when it increases and credit when it decreases. We want to increase the liabilities, income and capital with the help of credit and decrease it with the help of debit. So I hope you are done with this and I think you are clear with it. So thank you for today's session.